Hello and welcome to the State of the Fleet Market, a weekly video series produced by Automotive Fleet magazine. I'm Mike Antich, editor of Automotive Fleet, and today I'd like to examine what's occurring in the commercial fleet market for the week of August 3rd, 2020. So let's start by analyzing the latest commercial fleet data that's available to us, and this is really recent data. This is data that's based on a July 27th pulse survey that was just recently completed by Automotive Fleet magazine. And the scope of the study was to survey commercial fleet vehicle acquisition strategies, to get an assessment from fleet managers as to their forecast as to when their businesses are going to recover, and lastly, to get a status on the return to work protocols that are designed to transition employees working at home back into an office environment. But before going further, it's important to note that this discussion will only cover the commercial fleet market. It does not include daily rental nor the government fleet segment. So with that understanding in hand, let's now examine what are the current fleet vehicle acquisition strategies being embraced by commercial fleets. A good way to do so is to contrast this current survey with our last survey that occurred in May. In May, approximately 15% of all survey respondents said it was too early to tell what they were going to be acquiring in the 2021 model year. But now, as we've moved closer to the start of 2021 model year ordering, this percentage has decreased down to only 7% of respondents saying that they're still undecided. So of these now that have decided, what did they decide to do? Well, it seems that the overwhelming majority of them have decided to continue with their pre-existing vehicle replacement policies. And the number of fleets that are going to be maintaining the same vehicle replacement policies have now increased to 48% of all respondents, representing an 8 percentage point increase. Likewise, there's been a decrease in the number of fleets that say they'll be acquiring fewer vehicles. It's been a marginal decrease, going from 27% down to 26% in this latest survey. And likewise, there's been a decrease in the number of fleets that say they'll be acquiring more vehicles, which based on the May survey were primarily ordering those vehicles that were ordered in 2020 but never built. However, this is now decreased to just 5% of total respondents for the 2021 model year ordering. So the net result of this current survey reinforces the fact that most commercial fleets will be maintaining their existing vehicle replacement policies. So an additional question that was posed in the July 27th pulse survey conducted by Automotive Fleet asked, when do you anticipate your company's business activity to return to pre-pandemic levels? Now, many of the survey respondents are managing fleets that are operated by companies that the government has designated to be essential businesses, so they continue to operate during the economic shutdown. So as a result, 22% of all of the survey respondents have indicated that their business activity has already recovered. But for those other fleets, it seems that the goalpost is continuing to be moved back. So back with the May survey, the conventional wisdom at that time was that the business recovery will occur sometime in the third or fourth quarter of this year. Today, that now only represents 9% of the fleets. The overwhelming majority of fleets are now saying that their business recovery will not occur until the first half of 2021, with 7% of them stating that the recovery for their businesses will not occur until sometime in 2022. But the largest segment are still uncertain. 3 out of 10 commercial fleets still do not know when their businesses will return back to pre-pandemic levels. Another area that Automotive Fleet has been examining on a weekly basis has been the state of the wholesale used vehicle marketplace. And if you examine it in terms of auction volumes, this has continued to remain strong. When you examine it in terms of wholesale used vehicle prices, this likewise has remained strong, and both have continued to improve for the past 15 consecutive weeks. And this is primarily due to the imbalance of inventory in the marketplace. There's shortages of inventory and buyer demand continues to remain strong. However, the anticipation is that additional inventory will be entering the marketplace, primarily in the form of off-lease vehicles and increased volume of repossessions. In fact, banks are now telling their vehicle portfolio managers that they need to bring on additional staff in order to cope with this increased volume of repossessions. So regardless, everyone is anticipating increased inventory in the auction for the third and fourth quarter of this year, and this is going to put downward pressure on vehicle prices. Another topic that was addressed in the July 27th Pulse survey conducted by Automotive Fleet dealt with back-to-work protocols that are being developed at individual companies. Now, many of the fleet managers surveyed by Automotive Fleet, in addition to their fleet management responsibilities, also have dual responsibilities in other areas, one of which is facilities management responsibility. And many of them are on teams that are developing these back-to-work protocols. So in the survey, we asked fleet managers, when will your company end its work-from-home mandates and allow employees to return to their traditional work office that existed prior to the pandemic? Well, a full 40% of respondents say it's still undetermined and they don't know when these work-from-home mandates will end. Only 10% of the respondents see themselves returning to work at the end of this calendar year, and only 13% see themselves returning to work in the first quarter of 2021. So the anticipation is that we're going to continue to be working from home for a long time to come, and some interesting tidbits came out of this survey in terms of once we do start returning to work. 25% of the fleet managers felt that it would not be a full workforce return. The majority see employees returning in phases, with those more critical employees returning first. 27% of fleet managers surveyed say that there will only be partial access to the buildings that they work out of. Half of them foresee temperature checks being required of employees prior to them entering the building, and an overwhelming 82% foresee employees being required to wear masks to work. But one aspect that's not really discussed a lot, and this I think is going to be really crucial to determining the time frame as to when we do return back to our offices, is this whole issue of cybersecurity. And I think many companies are very vulnerable in having their employees access secure networks from their home. Many of these home systems already have malware on them, have already been infected. And my prediction is all that's going to take is one or two major breaches, and all of a sudden this discussion of returning back to work is going to accelerate. Cybersecurity is the key thing to watch out for in the coming months. One thing is certain, these cyber criminals, they're innovative, they're adaptive, and working from home definitely makes a company more vulnerable to a breach than it does when employees are working from a secured office. So with this concludes my State of the Industry presentation for the week of August 3rd, and I'd like to thank you for listening.